There was a time not long ago when buying an S&P 500 ETF was the surefire way to beat just about every professional Wall Street trader, hedge fund manager, stock picker, all of them. You just buy some VOO, wait a while, and boom. Better returns than the pros who spend all their time and energy analyzing data and trying to pick stocks. But now, at least for now, everything has changed. And it didn't take a fancy finance degree to figure out that when the world shuts down, some of those 500 companies that make up the S&P index are going to do better than others. By picking some tech stocks and avoiding the everything else, you can beat the index. One group of traders getting a lot of attention right now, Robinhood investors, the free stock trading app, became the fastest growing financial app of all time and changed the rules for how online brokers work. They did it by making the stock market more accessible, more approachable, and more fun. Since the stock market crashed, tons of first-time investors have flocked to sign up for Robinhood accounts because they see a generational opportunity to invest. That, of course, and some unexpected free stimulus money that just appeared magically in their bank accounts. Plus, there's nothing else to do. So today on Dumb Money Live, we're joined by the one and only Howard Lindzon. Not only did he see the promising future of Robinhood and invest in the company very early on, he has a unique stock picking strategy around identifying brands that appeal to everyone from age 8 to 80. We'll learn about that. We're also going to talk about the Robinhood effect and how this new generation of investors has killed the ETF. This is Dumb Money Live with Chris Camillo, Dave Hansen, and Jordan McLean, streaming live on YouTube. We are Dumb Money. Hey there, Dave here along with Chris and Jordan and Howard. Welcome to Dumb Money. First, obligatory reminder, we have to smash the like button. We have to wake up the YouTube algorithm, let them know that we're on the air right now. Good Monday morning, everybody. Big thanks to Howard for joining us this morning. For those of you, maybe one or two people who don't know Howard Lindzon or follow him on Twitter or read his amazing newsletter or listen to his podcast, I think he's on in more places than we are. He's a guru, investor, entrepreneur, founder of StockTwits. I forgot to bring my StockTwits hat. I was going to wear that today. He's basically an all-in-one fintech media phenomenon. So Howard, welcome to the show. And I think Chris has the story about how we first met you.
Yeah.
Can I, by the way, guys, I was up, like I always say this on Monday morning, I was up till almost 4 a.m. so nervous that I was going to basically not either sleep through the show or wake up with no energy for the show. And I woke up and was so freaking energized for this one because I have been investing for 32 years, as you guys know. And other than maybe Peter Lynch when I was a kid, one of the first investment books I've ever read, I have never felt a connection to anyone in the investment world. I have been watching CNBC since the very first day it aired. I think, Dave, you have as well. And yet I have never felt connected to technical traders or to fundamental traders or to Wall Street or to the people on financial networks. And then when FinTwit took off, I never really felt connected to any of the people on FinTwit because people just don't invest like I invest. I just felt like I was on this island all alone and nobody understood me. No one really understood what social arb investing was. Or even if I made hundreds of millions of dollars as a social arb investor, there's no one from the investment world that would ever really appreciate it in any form until I somehow, I think it was on StockTwits, I came across its founder, Howard, and I started reading about Howard. I started following his blog, and the name of his blog or his website or his motto is investing for joy and profit, or profit and joy. I don't know. It's one or the other. And I just, those words alone, it kind of represent everything that investing is to me. Investing for me, more than anything else, is an absolute love. It's a passion. It's something that wakes me up in the morning and keeps me up till 4 in the morning every single night. And I think I just wrote him an email or just started harassing him and calling him and emailing him. And I said, Howard, I have this thing. I have this company I'm starting, Ticker Tags, with my buddy Jordan. I'm a social arb investing. I've had a lot of success and nobody gets me. I'd love to sit down with you and get your advice. And I was out in San Diego and he was kind enough to take a meeting with me over lunch. and we hit it off. And Howard, thank you for coming on our show today. I know we don't you're so busy. We're kind of crazy here at Dumb Money. We don't often get to really connect like this. I just want to say that you are a big inspiration for us three and for the Dumb Money show. And guys, we get this question all the time. What other investment books should I read? Who else should I follow? What other podcasts? And almost every time I'm like, nothing. I'm like, I kind of like Nassim Taleb's Black Swan as a supplementary reading to what we do here. When it came in it was very relevant this year, right? But this is one person that we could honestly say that go get Howard's book, 8 to 80. Follow his blog, watch his podcast, right? And Howard, you have to tell us all those URLs to do that stuff.
Chris,
thanks for coming on the show today.
Before we go any further, we must address the elephant in the room. It is blowing up in our chat right now. What is up with that stash? I mean, I've now seen you for like 20 minutes before, so I kind of forgot that it was even different.
How fast did you pull that thing out?
It was just a week, but you wouldn't have noticed it until I shaved everything else off on Friday evening, and it was a prank that I pulled on my own family. My kids got it right away. They noticed it the very next morning. My son was calling me Mario. My daughter was calling me Dave. What's the YouTuber? What's his name?
Mr. Beast.
Mr. Beast. And Howard has another reference. But what's so amazing is my wife did not notice this for half of a day. Right in front of her, that's how little she sees me, did not notice me for half a day. So I can hold that over her for the rest of her life. If I miss a haircut or don't see this, that was what it was all about. So anyway, I'm not going to keep it very long because my wife won't allow me to, but I felt like I needed it at least for today's show.
Well, you might be a redneck trader is what our tagline for the show.
That's what Howard said.
You're a redneck if you're up 4 a.m. trading penny stocks in China. We could do a whole routine.
That is a remarkable resemblance. I think we actually need to promote you as Jeff Foxworthy, the Foxworthy Fox on stocks, right?
We'll just we'll make fun of bad traders. It'll be a shtick that we do on Dumb Money.
And the Q&A portion can be, I mustache you a question.
Oh
my gosh. But before we get into, we have so many questions for Howard, and I want to get into the show's subject. But Howard, when we start our show, we always, especially on Monday, we like to talk about what we did, what happened to our portfolio over the weekend, especially during this volatile time. One thing we talked about on our Discord channel on Friday was that we wanted to hedge this weekend because we're so nervous about the virus positive cases accelerating. At the same time, we were equally nervous about either the Fed doing something or a vaccine company coming out and having positive news, that we really didn't know what to do. And we didn't want to get caught with the market going way up or way down Monday morning and us getting slaughtered. So quite honestly, we were just confused. I bought a bunch of puts on the Dow, on the SPY that expired today, and I bought a few calls as well. I sold them all when the market opened up. It served its purpose. I lost a bunch of money, but not nearly as much as I could have lost, and I was totally willing to lose that money this weekend just so I can sleep through the weekend and have a good time with my family without overly stressing out. The reason why the market went up this morning, it looks like people have a little bit more positivity around maybe the numbers getting better. I think the Florida numbers were pretty low this morning, but we believe that could be a misinterpretation of the data. Also, Boeing had some positive news with their plane now scheduled to be tested. But I'm not believing it really yet. We check the numbers for COVID testing near me every morning, and they are worse than they've ever been today. The search traffic for people looking for how to get tested is through the roof. It's what, Jordan, you say 25% higher than Friday, which was a record?
Right? That's what I'm saying in like the hot spots. Like if you look at Miami, if you look at Dallas-Fort Worth, Houston actually didn't look as bad, but I mean, that could be just a blip or something like that. And LA, when I was looking, was a little bit too early this morning to tell because they're 2 hours.
Howard, do you
ahead.
let any of this impact you? I know you're more of a single stock guy. You're picking your single stocks. You don't let this stuff bug you. You don't do anything different to try to hedge your portfolio because you're nervous about the numbers getting bad today or this week. Does that impact the way you trade?
No, I mean, it used to, and I just changed my lifestyle, right? Like that was my life, and it wasn't suited to, I think we can get into all this stuff later, but it wasn't suited to how I was going to live my best life. It wasn't making me the person that I liked. I was constantly judging myself based on my performance to the market. Now I what I mentor other people is, who are you competing against, really, right? You're only really competing against, what the lifestyle is that you want and how you want to live your life. So right now I'm so light. I'm about 50% long stocks. And obviously stocks isn't even a big part of my life because I got private equity, I've got, my venture capital, I've got real estate, and then it's stocks. And that's after I decide how much cash I want to live with. So it works out that I'm not that long. And the stocks that I choose to be long are very aggressive trend ideas, very liquid, very aggressive trend ideas. And the stops are so far away on the things that because of the move in the last 4 to 5 months, the stops are so far away from where I care that my strategy I don't worry about that, because I am going to give back a lot of money at some point, but it's just built into my trend strategy. So I try and ride these things as long as I can. And so a weekend, no. I mean, I'll do stupid things. I sell too much of a stock, in the middle of a run. But generally, I try not to worry over the weekends, because that's the way I was, and I wasn't. It didn't fit my personality or living a better life.
You see, that's what I love. I mean, I just what you're saying right now is so obvious to me that it doesn't fit my life either. And I can't be doing this that much longer. I really hope that once we get through this year and this volatility passes, we will get back to never doing that again, because this is not something that we've ever done in the past.
Yeah, I can tell you've never done, because you said that. And the thing is, there's nothing wrong with doing March. When I started my podcast, I was never going to have time to do a podcast, just like you guys don't have time to do this. But life changed. Luckily for guys like us so far, knock on wood, poo-poo, salt over my shoulder, we haven't been directly, we've all got stuff that's shut down. But, in this weird world, if I owned 4 restaurants, it would be hard. My life would be harder than owning 100 digital portfolio companies. So I mean, when I say if I owned 1 restaurant, and that was my life would be way harder than me having a portfolio of 100 digital companies. So, I'm just lucky, not smart. I mean, the trend, obviously living in the future a little bit, I saw the digital, I wanted to be involved in digital. This is years ago. If we woke up tomorrow and the cloud was down, I don't even know what that means, but if Amazon was down, I wish I would have been in the restaurant business. So I'm saying, like, we're living through a perfect storm for people that are land-based, hospitality. No one saw this coming. If you had told me that, I was talking to some of my friends at Uber, and if you had told me ex-Uber, and if you told me I wasn't going to take an Uber, for the last 5 months, I would say, what are you talking about? And then if you had told me that Uber Eats' numbers went directly vertical and Instacart, we were laughing at DoorDash 5 months ago. So again, it's very humbling. So I appreciate all the intro. That was very nice of you. But I think the thing we like about investing is it's very humbling. We're constantly on edge. And I think what you're learning, even though you have a knack for understanding how markets work, there's only so much you can do of this, right? This is what got me bored with Kramer and CNBC and Fast Money. This is like so irresponsible to think that this is a lifestyle. The lifestyle that you have in your old show, where you travel around and you meet companies and you meet founders and you have a 10-year horizon, and you know that you can get rich from investing in America, not in public stocks, is great. You guys have built your own edge and your own audience, and I have an edge and an audience, but I don't live to do it. I love the markets because they're there for me when I want them, and I treat them with the respect as you guys do, that it could kick your ass at any point, as you were worried this weekend.
Yeah, and I think that's kind of how we generally, balance our time. Right now is a very different time, but generally speaking, we find like one or two big stock plays a year, and then we have a nice little balanced portfolio of the kind of companies that you invest in, the Netflix, Amazons of the world, right?
Yeah. For me, it was like, okay, I'm not a buy the dip guy, but March 10th, I woke up and I said, I'm starting a podcast because people are losing their mind. And if I get Jim, I'm going to call Fred Wilson and Jim O'Shaughnessy. I'm going to call the people and we're going to talk calmly about how this will eventually pass. And it's going to be, we're not going to get into the health part of it. We're going to get into what would you do today if you woke up and the S&P was where it was. And it happened to be, a week within the bottom. And I just happen to have all this time on my hand. I still won't be much leaving my house until, October, November. So, make content. It's made me a better investor. So I've used this time to learn the language in a different way, the language of the markets. And I both made some money at VIX 80 and I'm riding, Spotify and Peloton and a couple trends that I saw. I'm not fancy about it. I just think there was a couple big moves that you can make. And if you get one a year, that's fantastic. We just happened to get two, epic moves, which if you were in the right frame of mind, if you followed the right people, and this goes to the social stuff, you don't have to read a billion things a day. You just have to have a good network, a peloton of people that you can call on to just trail the great white sharks and just do a little bit better than most. And the trades have just been layups this year. And we could hem and haw. I should have put more money to work. I should have taken more risk. But the point is, people need to learn how to be on the right side of the market first of big moves. And then you'll slowly get confident. Once you get confidence of like zigging when others are zagging or just riding a trend, then you can up your game. And I try and teach people, it's like first learn when to not panic. And then second, learn when to spot a trend. Because moves in 6 weeks can be 3 years worth of moves. And we've seen that. And so that's what, that's kind of the goal of StockTwits and my whole mantra has been, is like, it's not easy, but it's not as hard as they would make you believe. And you could do this in 10 hours a day, or you can do this in 10 minutes a day. You have to choose what's best for you. And I just don't like the 10 hours a day. I love talking about markets to try and pinpoint the 2 or 3 times a year where I can make outsized returns of very, just studying how the market moves. There's 2 or 3 times a year. If I'm prepared, I am going to make all my returns. I don't have to compete against the S&P. I don't have to compete against CNBC. I don't have to compete against my friends. I'm just waiting for those precise moments. And writing, as you guys know with too, writing has been a key thing. So I tell people in their downtime, you should be writing, because writing prepares you to be prepared when the moments happen. And I happen to believe that March was a rare moment. And whoever followed us got on the right side of that. I don't know where we are today. So just quick segue into where you were this weekend. That's exactly how I felt about the last 3 weeks. So I'll be pleasantly surprised if we go up. I'm rooting for America. I'm rooting for the crisis. I'm rooting for just clear thinking. But the odds and the data tell me we're fucked. So my eyeballing of the data says this is horrific for most of America. But digitally, I've also come to realize this is fantastic. The world that I live in is a giant 24-hour Zoom, Robinhood, StockTwits, Netflix, Hulu video game, and I'm just part of the system. And it's a whole economy that people can't measure in its own. So as I've slowly moved my portfolio now quickly digital, 100% digital, where I got rid of Disney, I got rid of Nike, even though I love them as 8 to 80 brands, there's better digital 8 to 80 brands. So those are those small adjustments that I've had to make.
Can you tell us what an 8 to 80 brand is? Because this is Howard's thing is these 8 to 80 brands, and it's really genius, and it's just yet so obvious and so intuitively makes sense. Can you explain how you came up with that, the history there, and what an 8 to 80 brand is?
Yeah, I'm not a good marketer. I think one of the, and this goes to, we'll talk about maybe how I broke some of our rules with my partners and we invested in Manscaped, right? So because you have to break rules sometimes, right? Like I have a couple simple rules, right? It's the world has got great white sharks, and I'm a pilot fish, and you got to decide where you are. You can't lie to yourself. If you are a great white shark, it's cool. Like there's very few people that can kill you. I'm in the pilot fish camp. I believe if you stay close to great white sharks as investors, you make a lot of money. Second thing is the peloton, right? Like we're a peloton, the four of us. I'm seeing double a couple of you. And it's because I just took an Adderall, I think. But anyway, so the Peloton, I'm a rider. Here's my Rafa shirt. But the Peloton is a beautiful thing, right? The fact that 30 or 100 people can ride that tightly together to take down 40% of the wind, and they're doing 40 miles an hour in a flat where you and I could pedal our in perfect shape and do 24 miles an hour. You have to understand how that works, and that's how the markets work too, is just breaking down resistance and riding with a group of people. And the breakaway is when you have a set of knowledge and you want to leave the peloton or you want to get in front of the great white shark. You're still going to have those moments, but riding with a group of smart people or investing with a group of smart people or following a small group of smart people is all you need. 8 to 80 is simply, as having kids, and you guys have kids, I think. I know you do, Chris. The looking over their shoulders as 2-year-olds and 3-year-olds and watching them grow up with YouTube, and they didn't get Zoom or TikTok till recently. Like we were ahead of them on Zoom and TikTok, the adults, but Snapchat and Nike, and you just see, wait a minute, their first words are Nike and Google and YouTube, and I'm 50 and those are my words. And so trying to find brands that have demand from 8-year-olds to 80-year-olds, I guess you could call it now in the digital world 2-year-olds to 102-year-olds. So you could call it whatever you want. But those are the brands, in a Peter Lynch way. The demand is 100-year timeline, right? Maybe it won't be Gmail, but Google Maps a 100-year brand. Nike, Tencent now in China. What are some of my other ones? Spotify. These are brands that you can rest assured as rare assets that when they drop 20 or 30%, those you have a list of these. These are the ones you buy when the markets are down 20 or 30%. And so I just built this list of things that I will go shopping when the market is in turmoil. When the market's good, you ride as much as you can and you responsibly take some profits. And I'm just constantly building this list of 8 to 80 brands. And I would say that really it's 2 to 102 because of the digital nature of these things. And the world starts making sense, right? Then you don't have to worry about airlines because they're never going to make that list because they have too much leverage and not enough profits and very cyclical. Part of investing and riding like the S&P 500 is, since when do we have to, why is 500 stocks, makes sense in a digital world. Why does owning oil make sense in a world where infinite scalability of the cloud? Like, why make the job harder? So I think eliminating things, starting with a list and eliminating, makes it much easier than building a list. So, the 8 to 80 list is something for people to start with and go, there's too much, like today, like the last few months, there's too much land-based stuff in my 8 to 80 list. The rules change. Love Nike. But no, I love Lulu, but it got too expensive for me, so I swapped it into Peloton. I love Disney, but man, if Disney just spun off their video thing, that would be interesting. But with the land-based business, there's way better businesses for me to own for the next generation that just won't have this havoc wreaked upon them. Hospitality and travel are changed forever. That doesn't mean I'm bearish. It just means, why do I want to own something that has a drag on it? If you're going to keep up with the Peloton, you've got to constantly have the fastest bike. And for me, my bike are my companies, and I want to have companies that really make sense. They're going to survive dips, but also thrive in expansions. So that's simply it.
And your 8 to 80 list is one that you publish. You talk about it all the time in your blog. You link to it. You have on Koifen. I subscribe to it and follow it and see when you make changes. I think the only remaining land-based business that I saw on your last list was McDonald's, and everything else is digital, right?
And McDonald's, I just got wrong. Now I'm being, this goes to, some mistakes that you make no matter how good you are. How is that not Domino's? I'm just an idiot, right? And the main reason is I just don't eat the product, right?
Yeah.
Like, I I've tried, like I definitely a few times along COVID, I was just like, I got to order Domino's, and they're great at it. They're like leaving the bag, 20 feet away from your house and running for the hills, and they were doing everything right.
Little box riser that they leave on your front porch so it doesn't get soggy.
White.
Yeah.
Yeah.
But I keep telling Chris that I should have bought Domino's, and I never did, and I keep looking back saying, why didn't I do it then? Why didn't I do it then? So it's
okay.
You get it wrong from time to time.
I'll tell you the Domino's moment for me, and this is me being stupid, is the Domino's moment for me was, my son and I would go golfing, and he's a jiu-jitsu, like all these kids at their phones. It's a magic wand, right? Like once you see that, it's like you can never be bearish again on technology. But we'd finish a round of golf. He would triangulate ordering a pizza to be delivered at the same time that we got home. So really, it was a logistics play. Domino's had solved logistics for food for a kid. He was triangulating a fucking food order for $10 to arrive the minute he got home from golf. I mean, that's just magical, right? Domino's is a logistics technology company.
It is. The thing that shocks me about Domino's, and the reason that I never saw it is because, people are trying to eat healthy right now, and talk about one of the least healthy foods that you can put in your body. The whole thing's bread. Processed bread.
And I'm totally with you. And I wanted to have a restaurant. You guys are reminding me that I can it just I feel naked to not have a restaurant on the 8 to 80. McDonald's, I felt as a user of McDonald's, whether I'm biking and stop for a coffee and their app or their breakfast, I always found there was something on the menu at 100 or 200 calories that could just, while I'm riding, long rides, I could just. So for years I've been riding, and McDonald's is always around for me to stop and get a coffee or a water or
you score the apple pie. That's what I would get if I was on a ride.
But
yeah, I'm the breakfast burrito guy for $1. It's like going to a strip bar. I just throw dollar bills and get burritos.
but I think there's a generational bias with Domino's, because let's be honest, our age, our generation, Domino's fell apart as a brand for a while before it had its comeback, and we didn't understand that. And I want to throw out a possible stock pick. It's a stock that I actually started buying on Friday. I bought more of it this morning, and I really want to get Howard's opinion on it, because Howard was very early on Lululemon. I was as well, but it's some of these brands, I think, Howard, you have a good eye for, and I'm going to call out a brand that I hated on Thursday. I hated it so much on Thursday. It's a company that I have been shorting for the past few months, and I went long on Friday because it's a brand that I think our generation has completely forgotten. It's such a terrible brand for our generation, but the new generation probably doesn't have the bias towards how bad that brand is. And with the introduction of Kanye West, okay?
I was just seeing if I could predict it and pull up the chart while you were talking.
Yeah, I'm talking about the gap. I wonder, and it's not that it's a high conviction, trade for me or anything like that, but I just wonder if, because they're in a turnaround, they have a new CEO, they were potentially going to completely close the Gap brand, keep the other brands, but close the Gap. Yeah. I wonder if they are at a stage where they're ready to do something so bold and so innovative with everything top down, that if we could be talking 3 years from now, and does the Gap become the Domino's of the retail apparel world? I don't know. I'm just saying, for them it's not so much about Kanye, it's the fact that they pulled that off with Kanye, and that they even had the wherewithal to seek that deal out with him that aggressively to make it happen.
Well, and also you have to factor in that Gap was an aspirational brand in the late 60s, early 70s, and then it had this rise, and it was kind of cool in the 90s, and then it fell apart. So it has the potential of being a fun streetwear brand, I guess, right?
Yeah. Okay, so great one. I just pulled it up. So I have a good friend, Alex Bard, who was buying it at 5, and I was just berating him in March, because there were so many names that I loved, like Starbucks and Zillow, like brands that I loved. I didn't get Gap at 5. He's a smart investor, and he was just like, Gap's not going away. And all right, he's a smart guy, and I didn't think anything of it. Now I look at it's $12. I still think you would have done better in other stocks. But I think I'm a little bit biased. We have an LP that's, in the family, the Gap family, and on the board, and I'm friends with another board member. In hindsight, it seems obvious that they're smart people. And yes, you can't just be a brick and mortar company. I call it fashology. I think what scares me there is, do they understand fashion and tech, right? Like, it can't just be cotton t-shirts and jeans anymore, right? And so I worry that no matter how much they change, can they become that Lulu type brand, an everyday wear brand? And I don't know. Teens are so fickle, and they get so many ads on Instagram and there's so many look-alike clothings that I would worry. But it's an interesting idea.
Yeah, I mean, as far as competing with Lulu, though, I mean, Athleta, my wife prefers Athleta. So I feel like they're doing a good job on the women's side of that.
Because prices, or because what?
I think she just likes their fit better. She likes the way the clothes fit her better. I think they're doing really good things with materials on the women's side. But obviously, they're not doing anything to compete with men.
Yeah, I think that looks like a really interesting idea, especially if retail opens. I was trading Simon Properties as the proxy for all of retail, and I did pretty well, and I'm now avoiding it because I just don't know what's going to happen for the next year. I feel without a vaccine, I think pretty much America right now is in a holding pattern. We're all waking up rooting for finally for corporate America to solve this, which it's in their interest to solve, right? So overall, I'm bullish because they got to solve this. It's just a time issue. So with the Gap, it's just a question of what's their next move. If they can show another good move, yes, the stock can be a $20 stock. They only need to get one or two more things right because there's so much operating leverage, and if they can get their leases redone and all their competitors are going to go out of business, yada, yada, yada. But in the end, I think what Lulu solved was Gap had to be a 4-season company, and they were getting away with that, and that was the world. And now we're in a 12-season monthly, thing, and where the same fact, there's no seasons in a way, unless you wear expensive clothing. There's no real season. No, really, like unless you're high fashion, there's no season. You wear a Lulu sweatshirt and a Lulu shirt. No, and it's like your animals at this point. And that's one of the reasons I sold my Lulu is it's become too obvious, right? Like it's, in my world, it's easier for a Peloton to become a Lulu than a Lulu to become a Peloton. So I'm going to go on the $10 billion play, hoping it can be 50 versus Lulu holding on to its crown at 50, So
what's really interesting about the Gap, Howard, they took all. They're like the only retailer I've heard of that's taken all of their inventory that didn't sell, and they're just going to put it in a warehouse for next spring. They're not trying to like sell it off. They're just going to save it for next year, which I don't know what that exactly says about them. That they're so unstylish.
They're either timeless or they're unstylishly classic. Right?
I don't know.
Like I said, a cotton T-shirt is timeless.
Yeah.
Right? A good round neck or a V-neck cotton T-shirt is timeless.
But
well, to bring this back to Robinhood, though, we did see that Robinhood account holders picked it up. They took notice of this Kanye news, and they went from having very few people having it to like 300% more people on Robinhood, according to RobinTrack, now are Gap investors. So,
man, I think it's crazy how much Robinhood has gotten the headlines lately. Especially when you look at the assets under management for Robinhood, it's so small, but yet they're being blamed for like all that's wrong with Wall Street and all this. It's kind of blowing my mind. I like that they're getting the pump.
I'm getting listen, sometimes you get lucky. I'm getting the pump as a shareholder, as an early shareholder. First, you get stressed, right? So let me walk you through the moods, because Chris is an LP. I don't know, Chris, is it okay to disclose that?
We all are. Dave bought in, Jordan bought in. We're all LPs.
Yeah, we're all in Robinhood.
We're having a fucking hell of a year. All right, so I'm really happy that you guys are all partners in this. I don't have inside information, so I'll tell you like from mood reactions, right? Like the minute I saw Robinhood, I think you might have met the guys in 2014 when they came to Palooza and they were, crash drinking on the couch, and they're regular guys, right? Like with an idea that nobody loved. It was laughed at.
Could you tell what Stock Palooza is? Because it's one of my favorite things that Howard does just for the Stock Twits community, guys. This is an annual event that Howard throws, and it's literally when he says the joy of investing. This is the only stock. This is the only stock or investment centric event I've ever been to in my entire life that is actually interesting and fun and joyous to go. Could you tell everybody what this is that you guys do at Stock Twits?
The Howard pump on the show is very high.
We're long Lindsen.
My nipples are a little warm. The idea was, listen, Stock Twits was just such good people at the beginning. You know, they really bought into my community thing, right? We're going to kick people off. We're going to find like-minded people, but we're not robots, right? Like, you just have to behave. So our idea of an online community was like, Jesus fucking Christ. You don't need, like my problem with Twitter and Facebook is, once you start writing the rules for one specific person, you're fucked, right? And that's an important distinction to make. Like, it's like, you know, it's the movie with not The Shining, the movie that Stephen King. It was a book where you touch it. It's such great action. He could see the future when he touches you, and he could see, you know, that he was going to blow up. He was going to push the nuclear button. And the whole point becomes, what do you do if you know that he's going to push? Would you kill a future Hitler? And, you know, at Stock Twits, we used to have those discussions like, what happens if Kramer comes on, he starts pumping penny stocks, or all these people come, are we going to kick him off? And we had to have these arguments because it was spam. You know what I mean? We were worried about spam all the time. And those early decisions still hold true. Our decision at Stock Twits was, we're going to build a community. Right? It may be 10,000 people, it may be 1 million people, but the only way to get to 1 million people is to have the right 10,000 people. And, you know, and that's not a great VC model in hindsight. It's a great long-term community model. But so part of that model was like, let's have events once a year, you know, maybe a way to monetize, but the people that really love community will show up. And so we picked Coronado, which is where I lived at the time. We said, if we build it, they will come. Kind of like, if there really is a community out there, they'll show up for this event. And it's going to be a weird, strange, you know, mostly guy, what we thought community. As it turns out, after 10 years of doing this thing, it was just a great group of like-minded people. And like-minded meaning they loved the markets, and they were civilized, and they were inquisitive, and they liked getting together. And I think what made it really wacky is it wasn't really about stocks. I would talk about trends, and we would have companies that we were investors in, trying to explain how I think about the world. And so it really wasn't a stock event. It was more like an event around investing. And that's what I really love, right? Like, investing is what I love, right? Because trading, there's good traders and they can be born or they can be taught. But I think the idea of learning to sit back and let things really work for you is the real, if all the great investors, right? There's nobody on the Fortune list that short stocks as a profession, and there's very few hedgers on the list. Most of the people on the list invested in themselves, you know, are CEO-led public companies. So you can't, you know, those are the models. So yeah, the event became a great thing. When we invested in Robinhood, it was 2014 or 2000, yeah, and we were shocked, right? Like, we just could not believe that an app didn't exist on the smartphone, that, you know, in an Uber world, that you couldn't trade. So the idea of Uber for trading was just, I knew from Stock Twits and Twitter that it was going to work. I just knew that we could get 10,000 people to trade for free. And how dumb I am is the only advice I gave those guys when I came out of the first pitch meeting and we wrote a $100,000 check was, I called Tom and I go, these idiots think that they should be free. I said, wait, they're going to charge $1 a trade. I go, you know, the Jew in me was like, the Jewish guy in me was like, why would you give it away for free? He could do $1. So in their wisdom, they looked at me, agreed, and obviously, you know, couldn't wait till I left the room. They took my money and didn't listen to me. So and that's why they're billionaires and I'm a thousandaire. But we invested in the company. They let us invest in the company. And the whole way along, other than a few people, 99% of the people thought it was a dumb idea. And I think what was going on, this is the VC frame of mind. And this is what I got right. And I knew it. I got it right for the right reasons. the VCs were spending tens of millions of dollars trying to recreate Vanguard on an iPhone, right? Their whole bet was assets under management. Let's get to $1 trillion under management, and that's what the VCs got wrong. I think what we're seeing with DraftKings and with Robinhood, and macroeconomically matters too. It's like the movie Blow. Like, having assets is a headache, because you're earning zero. Like, in a zero interest rate world, we're seeing it in the banks. Like, it's a shitty business, meaning you're gonna have to charge people to hold the money. You're looking for more houses to houses, like in the movie Blow, when they realize in that house on the island, they have no more room to store their cash, right? And they have to go like buy places to store their cocaine and cash. So I think we're at that way with money, right? In a digital world, being a bank is the dumb thing. Being the transaction layer and being the layer where people use you as a utility is where the money is. So I think where Robinhood won was they are customer acquisition. So whereas Wealthfront and Betterment raised tens and hundreds of millions of dollars to go spend $400, the same as TD Ameritrade, to get a customer, Robinhood was paying zero. So if you look at TD America's marketing budget of $400 or $500 million, it's public information, and they acquire 100,000 customers with that, they're spending $400 a customer. So if Robinhood's getting 1 million customers for zero marketing, they're worth $400 million. That was my bet. I go, like, if they get to 1 million customers and don't spend any money, they're worth $500 million. And I think that is really the arbitrage that won. And I think we're seeing it today is like, you can figure out how to make money off these people. Now, they've done a great job of building the whole stack, and they built their own clearing firm and yada, yada, yada. And that's how you get from 1 billion to 8 billion. But I knew the minute I saw it. And there's very few times in your life that you see it. And it was because of StockTwits and Twitter that I saw that.
Well, they were
how much have you been freaking out when they've been having like major system outages and all this stuff?
So you're right. I was going to tell you that. So in March or February, when the systems outage happened, and I never get calls from my LPs. They trust me. They like me. And it just lit. The phone boards lit up, Joe. And it was like, you should have sold. And this is a zero. And really smart people, really good friends of mine. And there was a bit of a panic. And because we sold some along the way, because we do that. But you do feel dumb for a minute. And then my friend Brian Norgard, who ran Tinder and Growth, who's an LP of ours, I called him and I go, what do you think? He goes, Howard, if people want to sell you their stock here, buy it. He goes, they don't understand scale. And so he was the calm head in the room that said, you should be a buyer. If people want to sell this thing at $1 billion, buy it. And, within 2 weeks, the story had passed. We all know brokerages have outage. In a calm world, the lesson is, and we've all been through this, have multiple brokerage accounts. You can't have one point of failure for your money. Okay. So take that as a lesson, people, is like, I have 5 accounts, right? I have account in Canada. I got account in fucking all over, just so I can dial somebody in case something happens, right? So
I've got a funny anecdotal story about this with Robinhood. All sorts of people are trying to get into investing right now. Yeah. I love it. And so they know who I am, and they reach out to me for advice. And they ask, like, hey, what do you use? I was thinking about getting Robinhood, and I'll tell them, hey, I use, primarily I use TD Ameritrade. They're a pretty stable platform. Robinhood is great. They've had, a few system glitches over the past few months, just so you know. But I would recommend TD Ameritrade, even though I'm an investor in Robinhood. And you know what? They all go with Robinhood, no matter what. I can
it's more fun and it's easier and everything about it.
Here's the thing. So I have some theses here. So I don't know. I think you guys will stop me when you get bored. But this is all anecdotal. I'm a very anecdotal person, because you know what? I trust my instincts and I trust the data that I see. I trust my eyes and ears and network, right? And not enough people spend time on that, so they watch CNBC. You watch CNBC just because you're using it for an edge. Most people watch CNBC thinking there's an edge. I just stick with my network, right? Because I can call Brian and go, Brian, you've had Tinder outages, or you've had bad press at Tinder. Did it slow your growth? He goes, no, it helps our growth. And all I had to hear from someone who's seen that type of scale tell me this helps their growth, and I stopped panicking. And I started calming down my clients with it. I saw a guy who's seen that growth, who's seen all the scandals at Tinder, and he told me their numbers go up on Monday. So So that's when I calmed down quickly, and we went into we have to calm everybody down. They don't really understand this, and we got to explain it in English for those people that are worried. And luckily, and then you throw in COVID, and maybe we got a little lucky. I wouldn't have predicted that. The thing that I think Robinhood has done, and this will lead into some of our newer investments, is there used to be this world, Chris, guys, where we would think it was cool to have 5 screens. Right? You weren't a trader unless you could afford 5 screens, and you were dialed into trading 700 categories, and you knew what the fucking yuan was doing, and you knew what the yen was doing. And I'm like, I didn't know any of this shit, except I had 5 computers and I was miserable. I think this generation's edge is that they've learned to look at the world in one screen. Now, you can make fun of it, but that is their secret weapon. That when they look at the world, they've got to curate the world down to 8 tickers on their Robinhood screen. And that is their edge. Okay. And everybody's making fun of them, but that is their edge. Between their friends, there you go with the 8 screens. How could you follow? Yeah, so you could follow the market and know a lot about nothing. But these kids know the 8 brands that they and their friends want to own, and that is their edge. No different than floor traders used to be football players and used to be intimidating and used to be hired as athletes. And then it went to the electronic screen, and all those knuckleheads went away because the guy who wasn't good at intimidating was good at the screen. And now we've got a Robinhood trader, which really curates his ideas down to 8 ideas. The next phase, my bet, is for the 10 or 20 or 30 million people that have been onboarded, a certain percentage of those have earned the right and have loved trading and investing enough to expand their screen. Meaning, for the people that have learned to trade on one screen, they should treat themselves to a second screen and a koi fin where they can really dig in and really do some work and really do some analysis and comparison and technical work and fundamental work to see why these companies do that in a beautiful, elegant way. So I think we're going to we've gone to the unbundling or the bundling where everything went down to the iPhone screen. And now we're about to head back post-COVID and when the Robinhood traders get their ass kicked, which we know is going to happen. We're not judging it. It just happens. The people that survive the next downdraft are going to demand a better user experience and for their post-trade world. And so we think a koi fin and stuff like this is going to be very interesting coming out of it.
Guys, I always trade everything I do, all my research, all my trading is on this screen, my iPhone. And I always say that the best way to filter through the noise of Wall Street is to force yourself to do everything on this screen right here. And I don't even use Robinhood as my account, but this is everything. I don't do anything other than my iPhone when it comes to trading.
And I use Morgan Stanley. I still prefer to have a person. I'm old school because I've done Robinhood trades where I just made stupid mistakes, just flick of the wrist. And the XIV was my stupid trade 3 years ago where, it was a minute to close and I was too lazy to call my broker to do an options trade. And I just bought XIV and it went to 0. And that was the last online trade that, I broke my own rules. It was a lazy trade, read the prospectus. I find that all bullshit. I got screwed. I take responsibility, but that was a bad product. So for all the people talking about Robinhood's bad, the real bad actor here continues to be the SEC and the government because they're arming these old platforms with products that add no value to the system. There is zero value add by a triple leveraged ETF. So I honestly will change the discussion. You want to talk about Robinhood? I want to talk about the SEC and all these companies creating these fucking stupid products that create mindless, lazy investing, much like the Vanguard S&P 500. The reason Vanguard's here was a great reason. We were getting ripped off. But now we're getting ripped off on the other end. We're too diversified, we're too dumb, and everybody on Wall Street's joined into this party of set and forget, buy Vanguard, buy the SPY, buy the QQQ. I really think those products work for still a ton of people, but the way they've embedded themselves into the system through time dated, in your 401ks is just basically everybody owns vanilla and is hoping that vanilla works 50 years from now. It's not going to work. People are going to be steered off a cliff, and we're going to see more Marches. We're going to see more months like March. And if March had gone on through May and people had opened their statements 2 months in a row with those losses in the bonds, we would have had anarchy, right? So the Fed did what they had to do, but I still worry about people opening their statements for 2 months down 20%. What would happen?
But that's what's created most of the opportunity, the fact that there's so much money in these ETFs.
Yeah.
Let me tell you, so Peloton and Amazon, and there's a dozen other companies like that there is under no circumstance in March could you have made a rational case that those companies would do worse, not better, because of work at home, stay at home, yet they all got crushed almost equally. The rest of the market, and that was an opportunity, right, for all of us investors.
It was scary, but in the end, it was an opportunity. I was too busy on brands I really knew. I wasn't a Peloton user, still not. I get the story, and I got long at 30, but I would have got scared out on the move to 17. I know that stock now inside and out. And you're right, that got dumped with every ETF, and that is why my show in March and why the Panic with Friends was a good idea, because this type of price discovery is thrown out the window in high VIX situations. And those people that know, like I was buying Lulu at 130. I was buying Restoration Hardware at 90.
Same. Yeah, we made the same trades. Yeah.
Yeah, I mean, it was obvious that everything was, and I just think that set off the Robinhood craze, meaning kids with an Uber and with Netflix. When my son can come to me and say, with a fucking straight face, they don't even have a smoking pot problem, and say, Dad, I've run out of stuff to watch on Netflix. Okay, in a world where someone has that much time to actually believe that they ran out of things to watch on Netflix, to tell that millennial that they can only buy the S&P 500 is like, you're only asking for what Robinhood created. So we're by offering telling these people this mantra of invest in the S&P 500, you're just that's the dumbest thing we can ask kids to do in a free country, where they should be able to pick the brands that they want. I'm not saying that S&P 500 isn't work. For 90% of the people that want 10% a year for 40 years, that's a great strategy. It's a momentum strategy. It is, but there's 500 stocks. I think you can do better finding an index, whether it's gaming or the cloud, and hold it for 20 years. It's going to beat 500 stocks. And I just want people to get a little bit smarter. And, that's kind of my mission every day.
So Howard, I've seen you recommend the triple Q to people, which again, maybe it's more of a hands-off type person that you're talking to, but is that something that you would advise people to do over the S&P?
Take your strategy that you would apply to your 10 favorite stocks or your S&P 500 and apply it at least to industries that we know are going to be relevant 30 years. There's no energy reliance or solar reliance in terms of Tesla and stuff, but there's no land-based reliant key businesses in that index. Okay. And you've got the warning shots fired over the bow here, right? In terms of COVID. Yes, land-based businesses will come back, but they'll be forever changed in terms of their leverage structure and in terms of their risk profiles, right? Whereas digital businesses, again, barring the cloud going down, obviously, which is a risky phenomenon, I guess, if Google and if Azure and Amazon and China takes down the cloud or Russia takes down the cloud. I mean, there's no perfect investing strategy, but I'd rather be diversified through infinite space and digital space than through land and customers, land-based customers.
Howard, pulling this back into Robinhood, because I know a lot of our followers are on Robinhood. They trade it. I think at some point in the future, it's probably more likely than not that Robinhood will file eventually for an IPO, hopefully. Mm-hmm. I think it's publicly on their radar. It's not a big secret.
Yeah, they hired an SEC chairman person, yeah.
So if that happens a year from now, right? I mean, and Robinhood goes public at 10 or 12 billion or 13 or 14 billion, whatever that number is, do you think, like I think, that they could be a $50 billion company within a reasonable amount? I mean, do you think that that's something that our followers should seriously consider? Where's the cap on Robinhood? I mean, what's the roadmap for them?
As someone who sold some at $1 billion, so when I invested, it was 8 million valuation. So for
8 million, 8 million,
8 million valuation. And
$8 billion.
I remember calling Tom and I go, man. So what's great about the story is 2014, and I was on a mission, right? Like I was just too big a wimp to build a broker dealer. Like I had a broker dealer. I had almost killed myself financially running a broker dealer in 2000. Okay, you are not supposed to operate a broker dealer unless you're edgy, cheesy, or super know the ins and outs of why you started a broker dealer for a specific reason, right? A merchant bank, yada, 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 right? Otherwise, you stay away from that business because it's shark-filled water, and I'm the pilot fish. Anyways, so I didn't have the nerve. But what the Robinhood guys did is they put that whole thing in a box, right? They said, listen, we're just going to package it and run it as a software, but that's not our company. Yes, we're going to follow all the rules and have this, license in a box, but we're going to build everything else around it, distribution, UI, and that's why they're worth $1 billion. Now, if you had told me when we invested at $8 million, I said it's a unicorn. The minute I invested, Tom Labuch, I said, Tom, we're going to get some flack because the valuation's high. Like at the time, the valuation was high. $8 million. You weren't doing, you didn't have $8 million deals. You were doing deals at five pre, because they didn't have a product, right? Like they had a design, but it was not approved by the SEC or FINRA. It was very early, but the design was spectacular. And I knew that if you could trade from StockTwits or Twitter, that was still my holy grail. And I felt the only competition was Twitter, because Twitter should have a broker dealer so you can trade from the $. Anyways, at $1 billion, I called Fred Wilson and a bunch of our LPs and I said, what do you do at $1 billion? He goes, well, you sell enough to pay back your fund, right? Like that's just good business, right? Like $1 billion is a real number. And in hindsight, I should have been buying more, so I don't know, and then at $5 billion, we sold a little bit. So 50 billion, if they execute, and I get if the world looks like it does today and continues to be a digital world, yes. Aaron Levy, I ran into Aaron Levy, who started Box.net, and he's a small investor in the seed round as well. And just randomly walked into him 2 years ago. I remember a year and a half ago in Silicon Valley. And I said, hey, man, how about Robinhood? He goes, yeah, this is a $50 billion company. I think maybe it was a $5 billion company at the time. And I'm like looking at him, I'm like, fuck you. We don't even think about this stuff. Where did you pull that number out of your ass? And he just talked about all the possibilities of digital and how many customers around the world, and no one understands software and no one understands the size of these things. So here we are, and I have to agree with you, Chris, as someone who I respect, is like once the cat's out of the bag and once you put this in the hands of 100 million people, and if they do the right acquisitions and if they build the right stack, it's a $20 to $50 billion consumer brand. In the world that we live in today, where Peloton's worth 15 billion, yes. 600 employees, they're probably doing based on the numbers I heard, 600-700 million a year in revenue. I mean, you're kidding me. These companies are like just digital machines at creating customer satisfaction and joy. And, but it is a risky business.
Yeah, but like you say, 7 years ago, people were just laughing them off and not taking them seriously, and the finance world didn't even put them on the radar. And now every single brokerage is now also free and also doing fractional shares. And that just to compete, they've had to change their business model to become more like Robinhood, which I think is just remarkable, fascinating, and glad that we're all a part of it.
My bet too was that, and we got a little lucky here, because I was like, I'm an investor in eToro. So I knew what was coming because I had traveled the world and I had invested in Robinhood before Robinhood existed, in a company called eToro. So it's probably better than my Robinhood investment. But because they're not really in the United States, they don't get any fanfare, which was eToro, which is in 140 countries doing crypto, Forex trading, copy trading, which is, just an incredibly complicated company. But doing 600-700 million a year in sales, and it's a company you've never heard of with 500 employees, because they're in Russia, the Middle East, London, Germany, doing the same thing that Robinhood's doing. Plus, they have a copy trading product. So I'm just as proud of, if not more proud of eToro, because I made that investment in 2010.
I get their ads all the time with Alec Baldwin. I guess it's just they're targeting me well.
Oh, that Alec Baldwin ad, that was very bold. That was very fun. Yeah. And I argue with those guys all the time. I'm like, you guys are letting Robinhood win the country that matters the most. So in 2015, I would send them, the Robinhood designs, and I go, guys, Robinhood, you're never going to be able to break into the United States if you wait any longer. So I've had many of those arguments with the eToro guys saying, hey, why succeed America just to Robinhood? And now it's probably too late for even eToro to come to the United States. So I think Robinhood got lucky in the sense that the way E-Trade works, you got 60 product managers, and none of those product managers who are making $250 a year want to admit that Robinhood. So that's what happens in incumbents, right? It's not that the CEO didn't see this coming. It's probably these product managers talking to their bosses saying, no, Robinhood's not going to work for this and this reasons, because they're protecting their job as a product manager working on charts inside of E-Trade. And that is the big problems that incumbents have, is not so much the CEO, it's all these layers that they put into people protecting their $150,000 jobs. No different than when we watch Mad Men and ad people protecting, you know what I mean?
Yeah.
And I think that was all working to Robinhood's advantage, is that they just milked away all those layers, and TD Ameritrade and Schwab, they just couldn't act because the whole company didn't want to act. It wasn't just the CEO.
So hopefully someday Robinhood account holders will get to invest in Robinhood, and I hope it's sooner rather than later. But right now, they can invest in Peloton. And I do want to spend a minute talking to you about Peloton. I know we talked about it already on this episode, but I recently, I don't know, Howard, if you followed us through the Peloton story back in March and April and through earnings, but I spent 60 hours over the course of 8 or 9 days going so deep in on Peloton, where I claimed at the end of it, I had read every piece of content globally from every social web board to their Facebook page, to Reddit, to articles that had ever been printed on the Peloton bike, or had any discussion that was taking place anywhere in the world about Peloton. And I really, during that window of time, I felt like I saw what the future could be. And I honestly feel, and I know this sounds insane, that Peloton could be a $100 billion company.
Absolutely.
I believe they could, and I don't think a lot of people on Wall Street really take the time to understand, right, what it could be. What are your thoughts on that? I mean,
so it took me forever to get, so this is a good lesson, because I'm a venture capitalist, and I say those terms loosely because it's a joke. The fact that it's like Rodney Dangerfield. The fact that first of all, when I say those words, it just feels like you should sell everything. The fact that I can be looked up to as a venture capitalist. But there are some smart people in this industry, is what you learn, right? It's easy to make fun of venture capitalists because they say stupid things, or they wear, Dockers or whatever it is, but and they have huge heads, and they're weird, right? They see the world differently, right? It's no different than a comedian. So I laughed at Peloton the whole way, because we grew up with Nautilus and all these fucking commercials and like all these things that you buy and just throw them away, right? Nordic Track, these all went bankrupt. They all went bankrupt. And then you have like this mantra of hardware is stupid. It's it's all about software. So kudos to True Ventures. John Callahan is a legendary investor. They had done the watch company that just got bought by Google. Some Foundry. There's certain companies that are venture capitalists that are good at hardware, right? They see the future. So Peloton was one of those things that I would have been short in the old Howard, would have been short at IPO, like $4 billion for this thing, like eventually, you know what I mean? And what they did right, and I don't think this was initially their plan, was they became a software company, right? Overnight, they became a software company, meaning they flipped the switch to free, where they gave the product away for free. And I just kept hearing all my rich friends, which also kept me out of the stock, all my wealthy friends were like, you got to have a Peloton. I'm like, well, you're such a small slice of life. You're such a small slice of life. And it still didn't register, and the stock went to like 30. And then, went to 17 during the crash. And I was like, because Professor Galloway had recommended it like a week before at 27. I was like, oh, that guy sucks. And, everybody had that moment in March where it didn't. And then it came back very quickly. And then I had Jeff Richards on my show and a couple of the other early investors who were still long. And they just said, Howard, you just don't get it. And they explained to me how the software worked and explained to me about attention. And then it just started slowly getting it. Every person I brought on my show in March was like, you got to be long Peloton. But it was such a narrow slice. And then I had this Zoom call with a VC, a woman in London. And of course, she had a Peloton in the back. You know, everybody's working from home, and she had a Peloton in the background. I go, motherfucker, they made it overseas. She goes, yeah, my 64-year-old mother bought this thing and uses it every day. And that's when I just literally on the Zoom call in March, I bought the stock, and I said, man, it's hop the C, and it's not the VC, it's the mom of the VC in England, because they don't even have dentists there, and she's worried about her.
Did you read the Citron?
Her Peloton came before dental work. I'm long that stuff.
Did you read the Citron?
I still haven't gone because it says 5 weeks. Now I ride every day down. Like I love riding a regular bike because it's like my meditation. But I will get a Peloton because I am now part of the brand, and I will wear Peloton clothing eventually. I wear Rafa, which is kind of like, you know, men's riding Lulu brand. And we could talk about all that. Like I'm so bullish on certain verticals that and fitness. You know, so your story is, listen, they have an hour of a slice of people's attention a day. So right away, that's 1/24 of what Netflix is. So just out of the box, without having to make content. So to me, it's like forgetting everything else that they do, whatever Netflix valuation is, 1/24 of that becomes Peloton.
And I was late on Peloton too. It wasn't until Chris did all of his research.
Even a business, right? So they have the attention of an hour. So what could it be? It's easily $100 billion company. Now,
what I love is the arbitrage opportunity with Peloton, because when you get that deep, Howard, what you realize is that a third to half of the world in the investment world, they don't understand it. They don't get it. They rip on it. If you read that Citron short analysis report, the $5 Citron call on the stock.
Whatever. The guy fucking had a short on Shopify at 100.
Yeah, exactly.
Okay, first of all, anybody can go. You want me to come on YouTube and promote fucking short ideas? First of all, I couldn't live with myself. The guy should be ashamed of himself. He's living off one call. Okay, not that it doesn't scare me when the guy goes short of the stock, but that guy clearly does not understand a digital world. So he should go fuck himself. I don't care how many land-based accounting frauds he got. You know what I mean? This guy is doing more damage than Robinhood could ever do. He's killing people. He's literally killing people. How do you cover that 120 short? Shopify's at $900. You are an idiot to me. People that go on and recommend short stocks. One thing, I get it. I get it in a world of accounting, of valiance. I get it in farmers. I get it where you have to ship product and your customers, you talk to every Peloton customer, just like every Tesla customer, just like every Apple iPhone customer. They love their fucking product. So all the work you have to do is talking to the customers, okay? If I talked to 70 Peloton customers and they said it sucked, there's my research. It wouldn't matter to me to get into the accounting. But these people just get it wrong, and they get it wrong so badly that I don't want to listen to them.
And that's where we say that the real people have the edge sometimes because the analysts are in their own world. They're living a completely different life.
There's many smart people that I love. I won't name names on Twitter that have got zero. I have zero respect for because they just continue with the Tesla accounting story. And they're short the stock and talking people out of buying the stock. Okay, your job is not to warn people of the end is near. Okay, this is what I tell people on Stock Twits. You got an opinion, share it, but you're not here to save people. You're here to share your ideas. You know, this is a constant thing on Stock Twits. Hey man, I know that you think the world is ending. Okay, but your job here is not to warn everybody. You're not Paul Revere. You're here to journal and share ideas. Okay, so just get over yourself.
And you can speak to 50,000 Peloton customers on the Peloton Facebook community page alone. And that's what's so amazing about social arb. And it blows my mind how little time Wall Street spends going deep into those channels that exist for everybody for free. You don't need to pay for that. It's not Wall Street research. You don't have to hire someone to call channel checks. It's literally all right in front of you if you just want to spend the time to look at it.
Yeah.
Well, I think the interesting thing with Peloton specifically was just that it's not just that people raved about the product and that they loved using it, But then they were trying to recruit other people to get on so they could ride with their friends and all these things, right? And so it has this, knock-on effect.
Cult.
And I think all these people, anybody watching us or anybody who wants to do social arb, because I call it social leverage, you call it social arb, and the name of my firm is Social Leverage. But the social arb is just the only data you need. Because again, I don't think people should trade. I think people should invest. I think if an investment becomes a trade, like Robinhood became a trade for some of our money because it went from 8 million to 1 billion, like you have to have some rules, okay? And Spotify went from 160 to 260, so I peeled some back, not because like I don't know if it's undervalued or overvalued, because it feels like when you make 100 points in 3 weeks that you pay the gods something. But there is so much social signal if you know how to read it. And I'm just lucky that I got involved early. When I saw YouTube and I saw the cat videos, and I was a hedge fund guy, a miserable hedge fund guy trading in a room with 5 screens, not beating the S&P consistently and pulling my hair out consistently and being in a bad mood and feeling bad about myself because you're competing against the S&P. That whole mindset was wrong. Right, because the S&P is a good formulaic momentum system, right? And it has enough momentum and money behind it, it's very hard to beat. But when I saw YouTube, I knew there was going to be a social edge. When you give the microphone to 1 million people on the street and you can figure out how to read it, you have an edge that nobody else has. So when we started Wall Strip, my first show on, which was kind of the original, social show, which was, when I got long Crocs in 2006, it wasn't because I thought I was using the Crocs, but on YouTube, you could just see thousands of videos of people talking about their Crocs shoes. And it was a phenomenon. And I got long Crocs, and that's what our show was based on, like social phenomenons. And Wall Street became a hit, not because it was such a popular show, but it was such a good idea to read what was happening on YouTube. And it's still a lot of signal on YouTube, right? Just your show. So just living with these products is your edge. Using TikTok is your edge. Using Snapchat is your edge. Using YouTube is your edge. And people just don't know how to think in the right way. When I read Tipping Point, when I read Malcolm, I don't want to have coffee with that guy. I think he's probably an idiot. But the guy can write, and the way he thought. And when I read Tipping Point, and I read the story about Soho and the Hush Puppies, and I'm like, that book, if he had just put a stock title on it, how to make money off tipping points, like he called the book, and my first book was based on his book because it was like, if you apply stock picking to tipping points, you are going to make a fortune.
Yeah.
You know what I mean?
Yep.
And so when I read his book, it was like, wow, if you stand in Soho every day of the year, you're going to see so much signal from the center of the shopping universe. And so why is Soho my favorite place to go in New York? Because that is where you see signal. That is where you see pop-up stores. That is where you see new retail brands. And that's where you see international customers spending their weekends, and you can see what they're carrying. That's where new trends are started. And online, they're started by using TikTok, and they're by using Snapchat.
Okay, now you say, speaking of Tipping Point, and you mentioned Spotify, I want to ask you, because I was late to the Spotify game, but I am now in Spotify. I'm long Spotify. I believe maybe we're at some tipping point for what will be the future of podcasting, and the bold moves that Spotify is making right now, I think, are fascinating. But I am not as I'm not a Spotify user. I'm not as educated as you. Tell us your angle on Spotify. I'd just love to hear it. I want to make sure I'm not making a mistake.
Yeah. So I think first of all, it's the hard one, because they did everything that I would do. They have laid the groundwork for hundreds of consumer brands. So first of all, I'll go close my door. Hang on one sec. I think Spotify is not so much about getting Spotify right, because there's going to be 100 Spotifys, right? And by that I mean, if I'm Robinhood, and I'm not, and I have no inside information, and they don't talk to me about this, and I refuse to even interject myself. I'll let Tom deal with Robinhood, my partner. Is Spotify's direct listing was fucking genius, and it was a fucking great thing that they did. They fucked the banks. They didn't need money. They believed in their company. They picked a price out of thin air. So it wasn't something, I bought it originally because I was just so loyal to the brand. And it was 2 years of but But, the stock didn't do anything. And the knock on the company was a legitimate knock. The fucking music companies control that industry. Margins suck. Like, there's no real reason for that stock to go up. And so for years, it was like, oh, they should do podcasts. But listen, I've made podcast investments in 2006 and 2007. I know what zeros look like. I don't just know what billion dollars look like. From Blog Talk Radio to all these podcasting apps, Twitter was a podcasting app that pivoted. Let's be honest. A lot of this stuff is about getting the timing right. If you don't get the timing right, it doesn't matter how much money you raise, although that can help if you have good CEOs that can manage a runway and the cap table, but you got to get the timing right. And podcasting has just been a fucking wasteland of venture capital money. Wasteland. But the reason podcasts exist today is the same reason people thought it would be popular in 2005, talk radio, right? And verticalization of the world and 100 true fans and et cetera, et cetera. And just so happens that when they bought Bill, the sports guy, Bill Simmons, who I'm not a fan of, I just don't listen to sports talk radio or Barstool, and the stock didn't really do anything, right? Like, there was no signal yet that the world was in harmony with podcast, because you watch the stock price and it gave all the news. They bought Bill Simmons, the stock kind of sat near all-time highs and then dribbled down, and part of it was related to the market. Again, because Bill Simmons does not make you the podcast king. It just shows that they're an interest. And they bought Anchor. They bought a couple bad companies, in my opinion, yada, yada. And still the stock didn't do anything. So there's still no real signal. Because when YouTube was bought by Google and we did a Wall Street man on the street the next day, the street was like, this is the dumbest acquisition of all time. There was so much signal on the street but the stock price just, Google's price dropped and then shot to an all-time high. And that meant to me the world was voting that YouTube, whether this man on the street agrees, this was a genius acquisition. The market had voted. And so I was waiting for that signal from podcasting world. So you didn't get that on Bill Simmons. But then, and the stock went down with every other stock in March. And then it started climbing all-time highs. And it got to that 160 point, and I was already having a good month. And I said, you know what? I love Spotify. It's the number one app I use, 2 hours a day, 3 hours a day. My son, he uses all the apps, but I'm like, there's something going on with this stock, and it could be market related. So I bought the stock. And then the Joe Rogan news came out, so I was a little lucky there. But the stock could have acted negatively. On that Rogan news, the stock just kept going, And by the second or third day, I was just piling into that position, meaning there's more going on here than we can understand. And it's not so much about the financials, because it's never been about financials when the stocks really take off. It's just about something that it just hit a different inflection point. And then they announced the whatchamacall deal with what's her name, Kim Kardashian. And I don't even think these are real deals. Like, I'm not a Joe Rogan fan. I'm a fan of like O'Shaughnessy and you and whatever I want. But what Spotify does, like Shopify, when I search Howard Lindzon, you can find my goddamn podcast, and it's just easy. When someone asks me, do you have a podcast? I'm not like, what, you didn't know it? I'd say, hey, you can search my name on Spotify and you can see all my podcasts. That is all it needed to do. Yeah. It's like a place where enough people have it. Now, imagine how I started a podcast 3 months ago. I have maybe 5,000 listeners. I'm not doing it for the listeners. Imagine if they ever do their algorithm and put me in a Monday podcast loop to that audience. I could end up with 100,000 listeners, my doppelgangers around the world. So if you're not creating content and putting it on Spotify, you are like so far behind. So if you wanted to start a podcast tomorrow, I'd say fucking do it. Put your shows that you do here on Spotify.
We actually do that. So this show, after
I'm telling you,
within 20 minutes of us saying goodbye today, this thing will be an audio podcast on Spotify and Google and Apple and on all of them.
The edge that you guys have is that there's three of you. I'm Howard Lindzon. My Tom and Gary don't want to get involved in my nonsense content. Like they're busy. And you wouldn't invest in social leverage if it was just Howard Lindzon, because you'd say, wait a minute, I gave this guy money. He's wearing a Riviera hat and he's just doing podcasts all day. How the hell is that? I'm going to get a quarterly letter out of these kids. So, I mean, you guys, your business is based around a different thing. The fact that there's three of you, like I told you before the show, I'm in with you guys. Like the fact that I can just show up and help drive traffic to a really smart show, like this is the future. Because he's a whiz live editing this. we've got the leopard chair, and we've got Fu Manchu mustache. We've got everything.
I mean, what else do you need? This is YouTube gold.
Maybe less.
Let's talk a little bit more about the things that Robinhood investors are investing in, because they're the uneducated, uninformed Main Street investors. They're what would essentially be called dumb money, which we don't take any offense to, obviously, but they're the ones who are investing in things like Hertz after they filed for bankruptcy, and in all of the airlines and cruise ships and automakers, Tesla and Ford, and all the FANG stocks. What can we learn from them, and what should we avoid from that?
Great question. It breaks my heart. But I'm not going to say Robinhood's a bad product. I'll go back to the SEC and triple leverage ETFs. If they're not going to do it in Hertz, they're going to blow their brains out. I think one of the best reads I've had on this, and I'll come back. Hopefully, Chris, I answered your Spotify question.
Yes, you did. Thank you.
Now I'm really bullish, just based on they're the leader, and they've gotten feedback from the markets that the more smart people they buy in podcasting, that they're going to have margins there. That's what the markets. They're each feeding off each other. The management saw the results of this strategy and is going to be emboldened by it, right? So you buy the dips on Spotify, and I think Spotify can be $100 billion rare asset brand. So going back to the Hertz thing, it breaks my heart. I'm sure it does with you too, that people use these products in a dumb way. Okay, as much as I like Davey Barstool for for breaking up, for just shitting all over the old guard. I worry that already, him talking about 30-cent stocks, good or bad, is just not responsible, right? This is not something that I would do, and I'm not judging, but I think it's the worst use of his platform to talk about a 30-cent stock. It's funny. I get it, but that's what we need to be talking about. Is he has the microphone, and he should be not moving stocks. I know it's cool to move stocks, but it's not the it's not what I would do. The Hertz thing is just a phenomenon of the time. I think this guy, he works for Shopify now, Alex Danko. He has a newsletter every Sunday. He worked at Social Capital, and he basically said, in this Reddit generation, these kids are just, it's a YOLO. It's like a dare bet. It's no different than Jackass, where they go, I'm going to risk $5,000 and see if I can get out before you. It could be blue or green. They just happened to pick Hertz because it was in the news. And I think you just have that weird, terrible Jackass game of chicken going on with people's money. I think it's irresponsible. I think there's smarter things that these kids could do. And our job is to show them better ideas, because they're eventually going to lose their ass. And so, this goes back to my 8 to 80 list. If you can't make a living off the best companies in the world by either owning them or invest or buying fear, you're just not going to last in the business. And so Hertz shouldn't be on anybody's screen other than, man, I don't know how it would stay alive that long. The only question I have about Hertz is, why the hell was that still a company?
Yeah. Well, and the first quote I looked up this morning was Chesapeake Energy, just because is it going to happen again? It's a negative $7 billion company, and are they going to buy it up? But luckily they didn't, it looks like.
Yeah, I'm saying these kids are not as dumb. They want to be dumb. Listen, they can go buy Walmart and buy a gun in 2 weeks and get ammunition up the yin yang. Again, I'm not happy about these things. They are adults. I'd kill my son if he thought that was funny. And I think if they're going to burn $1,000, let them burn $1,000.
Look, I think it's just a bad, irresponsible message to be sending people, when the goal should be education and getting people interested in investing throughout their entire career. Even if it's not going to be their career, it should be some part of their life, right? If they want to retire.
It's the greatest gift that America has, is the stock market,
right?
Because it's another form of English. It's, you only have to have English as your first language. We all speak English. You don't have to understand balance sheets or fundamentals. You have to understand usage. You have to understand trends. You have to build a network yourself, and to not take advantage of that. And I think Vanguard was the first great product to disrupt Wall Street. The next great product is the unbundling of Vanguard. And we are just at the tipping point of that. Meaning, I wish I was 10 years younger, knowing all the people like you that I know that took me so long because I was a value line, read everything. But I was reading stuff that was so old by the time I read it. Now I'm the one that people are following. So in the peloton, right? I've built a peloton on a network that is so far ahead of everybody else that I don't even have to do anything fancy. And that's the pinch me stuff where I get worried, where I'm like, fuck, people are following me, so I got to be more careful. So I think I've taken the responsibility to try and be more careful. You won't hear me talking about penny stocks. I will pump my companies that are private, but I can't hurt anybody there. I love the products that I'm backing. And I've learned from the best, Fred Wilson, Brad Feld. They cheerlead their companies, and I'm not breaking any rules. And I'm wrong a lot because companies don't work; they're private companies. But I'm dealing with accredited investors. You won't hear me talk about stocks under $10 because I just don't want the headache.
And we all the time say that we're not trying to tell you what to invest in or how to invest, but just more of how to think about investing, how to source your own ideas and try to vet your own investment thesis. And we give examples of things that we're investing in, but we're not financial advisors. We're not experts. We just do this because we've had some success in it and we enjoy trying to help educate people. And I think one of our commenters mentioned that the Davey day trader phenomenon started with Wall Street Bets on Reddit, which is completely true.
I guess I'm lucky. It's just like Zero Hedge. Zero Hedge made no sense to me because why would I want to be wrong all the time? What?
Yeah. What do you want to be? Yeah, do you want to be a perma bear?
Forgetting his politics, he should have been kicked off Twitter for just being wrong forever. Okay. But the point is, how do you? And this is a good point. This is when I started Wall Street. It's the Oprah versus Montel Williams. And Montel Williams made a hell of a living just doing stupid stuff, but you get really rich by being positive and being Oprah and the possibility and opening your arms and being open to possibilities. And that's the way I feel. Luckily, I wake up on that side of the bed every day. So I just continue to just believe that there's more opportunity in giving out good information. So what I do, like you guys do, is I tell people what I'm doing. I'm not telling people what to do. People go, "Why'd you do that?" I go, "I don't that's not my job. I don't, I'm open to you telling me why I'm dumb, but don't ask, I'm just telling you what I did. And you don't have to follow it. And I'm not pounding the table like bye. I'm looking for reasons to talk me out of Spotify. And I'm looking for reasons to talk me out of Peloton, and I'll listen, but I'm not telling you to buy Peloton. I'm just telling you why I like it and that I actually own it, and I'll tell you when I sell it. And, and there's better times to buy it than there aren't. And just because you heard us today doesn't mean you should run out and buy Peloton, because that's not what we're all saying. We're saying we believe this is a $100 billion idea. Would it be better to buy it at $5 billion on the way there? Yeah. But, as long as the story hasn't changed, let's hope it drops 50% because that's just an opportunity.
Hey, Howard, one of our followers has a question for you, and I think it's interesting. I'm not sure if you're familiar with it, but he said, what do you think about active ETFs like ARKA, which invest in innovation? Is there enough value there to potentially invest in an ETF? Or
if you think I keep getting hit up with that one too. Like, if you think that person's a special stock picker, it just looks to me that she got her weightings right, and that's like a VC run stock picking fund. So I can respect that, but I know nothing about her, and I don't want to trade. I don't want to be a VC public market investor. I will act like a VC in March, where I bought some of these broken fintech companies in Latin America, Stone and Pags and Mercado Libre. I mean, to me, it was like, okay, they're broken. The charts look terrible. But wait a minute, if fintech's going to be a thing, these are the three public companies. And so there's points where I'll look at the market and go, I'm going to act like a venture capitalist. And that's when the VIX is at 90. The rest of the time, I don't want someone trading a momentum portfolio for me. So I think it's lazy thinking. I think she's done a great job, whoever's running ARKA, with her like innovative way of she's sharing ideas and her end of day trades, but that's just noise. So I feel like an average investor could take 2 of the 5 FANG stocks or 3 of the 5 FANG stocks, the ones that they really feel are the ones that are going to win. For me, it's Amazon and Apple, and I'm overweighted. And then I pick 10 10 to 20 of the up and comers, the ones that could be fangs. And that's how I invest. And then for me, it's just a weighting of, how much risk I want to take. And right now I'm at 50% long, and it's working out great because the alpha's been so high. I mean, the beta's been so high that, the market goes up 1%, I still match it even though I'm 50% long. So I for the moment, I'm in sync with the market. It won't last because this can't last. The same stocks can't go up every day. So I know I'm going to get hit over the head, and I'm constantly looking for new ideas. And you brought up the gap today. It doesn't appeal to me, but I get the story. So I'm constantly looking to just fine tune and do some gardening on my portfolio, which is another thing. We've got to constantly be, fiddling around the edges. Otherwise your ideas stale.
On that, so like I think you're long Snap right now too. How long have you been? Is that a newer addition to the portfolio?
Very new. I technically was what got me interested at around 20, even though it had gone up like 400% from the lows. And I just started hearing its name more. My kids stopped. They never talk about it. So I remember asking my kids about it at 5, 6. Guys, you're living on Snap. Why can't? And they would never, unlike other companies where my kids own stocks, they were never like, Dad, yeah, you should buy Snap. So my kids screwed me here because they never said, Dad. They all denied they use it. And I don't know if that's their secret defense to keep old people off of it. It could be. It could just be like, fuck the parent. Like they wrecked Facebook. They've wrecked Instagram. And we're not going to let them wreck Snapchat. I mean, that's my thesis. That's it. Yeah. You don't think, or you do?
No, I do think that's it. I think that they need to keep this their secret little network that the parents don't know about, and they're not thinking, oh, it has ads on it, so let me tell my dad. No, it's like, let me keep this my own thing. Let's talk about another.
Well, I think all three of us tried to figure out Snapchat at some point in time, and like it's not.
But I think that's the secret sauce. So I think the upside here is why I'm long. I started buying it at 20. I probably 19. Again, like Spotify, I pre-bought it ahead of the breakout because first of all, it was a good market a month ago. Second of all, the momentum was behind it. And then I heard one of my companies, Rally Road, was going to be part of their AR presentation in their new monthly thing. And I'm like, really? And I go, that's cool. And when I found out what that event was, which was going to be about them opening for mini apps, which is a 10-cent model, that also interests me because no U.S. company has tried that, right? Twitter's closed, Facebook's closed, but 10 cents an investor in Snap. So all of a sudden, you could build, and I've told this to Alpaca, is like you should launch a mini financial brokerage app inside of Snapchat. And so if Snapchat gets this right, that'll be like a WeChat. And if they and so the other thing working in Snapchat's favor is everybody who thought that kids would leave. My daughter graduated from college and she still uses Snapchat every day. So I think this next generation is going to keep their 1-200 friends that they have on Snapchat. And it's not a social network, it's a communication product with AR and fun videos. So I have a feeling they're at the early stages of their growth. And it's not necessarily anything they did right. It's just a matter of this network that grew up with it from 15 to 20 is starting to keep with it. Whereas, in the first few years, it was like, okay, I graduated, not enough people are using it, so I'll never use it. But I think this generation that's coming through college all kept using it, and they're going to stay on it. And I think that is a huge win. And there's no Trump stuff on there, and it's more like just goofball AR, and I think that's a win in a social media world. They're not really a social media company.
Yeah, but it's kind of like a TikTok where it's there for fun and not for. Let's talk a little about.
TikTok already is getting all the politicians on it, and John Oliver did a thing where the Papa John's guy is doing TikToks, and the kids don't like that. Kids do not like that.
No, although Will Smith's TikToks are actually amazingly produced. I do like watching his. I probably do spend too much time on TikTok for my age. But let's talk about.
You're living in the future. I would argue that this is going to give you guys an edge in some of your future investments. So I think you're doing it because first of all, it's a good product. Second of all, you are your inquisitive mind, and thirdly, it's part of your edge. Is you're not using it because it's a bad product. You're using it because it's a fun product, and it's kind of like a modern MTV. So I don't think there's anything wrong with using it. I just haven't figured out a workflow that allows me to use it, other than watching my kids over their shoulder using it and giggling and having great joy at it. And, like investing for profit and joy, I think all these tools should be for joy. Peloton's a The other thing about Peloton is a social network of joy. People are sweating. They're competing around good things. You can't put a value on these things in a world that is kind of kablooey right now.
Yeah,
True.
So I keep trying to think of a way for Chris to be on TikTok, but he talks too much. He wouldn't be able to get his thought out in 15 seconds.
Chris should have a podcast. It should just be called Chris and Chris. And with this Chris Camillo, that would be the name of the podcast. And or the stash, the fintech stash.
Now that's going away very soon. I'm sure.
I think. Listen, I've tried to make a TikTok. It's too complicated for me. I like the tweet. I like sending out a message, yelling in a crowded room, seeing the response. It's a perfect platform for me. And, I love blogging, but, I'm starting to like podcasting. But there's only so much you can do. I mean, it's hard to be. That is a really beautiful, a well-done TikTok is a beautiful piece of art, you know.
And that's why I don't want to ruin TikTok by trying to be on it myself. Can we talk about Facebook, though? Because the advertiser boycott is in the headlines. Is that going to help Snap? Is that going to have long-term damage to Facebook?
It's hard to say. I mean, Facebook is like cigarettes. So long-term, it is a damaging product, right? Because their terms of use have put them in the eyes of death, right? Once you've made that moment, once you've chosen sides, and that's like tobacco companies, finding scientists to say that smoking doesn't cause cancer, right? Like they've chosen, I don't even blame anybody, it's just what it is. And they've also can't innovate. They've had to buy their way out of jams. So I think that they've declared their strategy, right? And they are the king, meaning if Twitter is going to buy a company, the next call is to Facebook and say, hey, we got an offer from Twitter. This is why Twitter's fucked. They would have to buy something that no one else saw, and it would have to be a home run, right? And Twitter doesn't have the soul to pull that off. Jack is very busy with Square. So Facebook has the kingmaker potential. Any good acquisition offer gets shown to Facebook, and he gets to say yes, no, thumbs up, thumbs down before that acquisition gets done. So it's going to be very hard in this type of world where their stock is worth so much to beat Facebook. The ad thing is nonsense. Starbucks can't afford not to be on Facebook for any length of time. It's just the way the world works right now. If I'm Facebook, I'm saying I hate Mark Zuckerberg. We're here because we have to be here, and let the government figure out what better to. But right now they have a monopoly. I think there's smarter ways for Starbucks to complain. But I think they'll be back. I think Facebook's a buy on dips. It's one of my 8 to 80 companies. It's underperformed because it's an ad-based business. I don't think they're going to stay an ad-based business. They should have bought Shopify. They should have bought Robinhood. They've missed some acquisitions, but those weren't. They didn't look at Shopify because Shopify never came to them probably with an offer from another company. Right, so they just felt like, all right, if Shopify makes it, we'll do a deal with them, which they did. Robinhood, they never thought about being in finance, so they didn't make the move to finance until Libra. I think they could have bought Robinhood, and that would have been a home run for Facebook. You throw Facebook social network on Robinhood, Facebook would have probably be worth $50 billion more. So I think they're making some mistakes, and that's why it's underperforming, because they're a conglomerate. It's my least favorite 8 to 80. I'm always looking to replace it, but their international power is just so high, and their optionality to get into verticals is so high. Does that help?
Agreed. Yeah. Totally agree. Man, this has been really, really awesome. I have our next show, just so you know, Howard, and we've been working on it for a week. It's on Thursday. It's all about the next Tesla and the future of electrification. And the next Tesla might be Tesla, right? And you've probably been following it. There's been so much happening the last 2 weeks with new IPO. I mean, I didn't realize how many companies were involved in electrifying different segments of the automotive market, right, in the truck market until the last 2 or 3 weeks. And I'm like, I thought it'd be a quick exercise to prepare for this episode.
No,
and it's become like
the canopy, because of the market cap of Tesla, it's opened the canopy up for everything else. Like people are like, oh, bigger than Ford. That's not the real issue. The issue is now mines have been expanded and industries have been exploded, from batteries to distribution to logistics to it's an industry. I'm fortunate it's not an interest of mine, right? I'm not a car guy. I'm a Uber person. I'm a biker. I'm like a village person, not a city person. So I missed the whole thing. Other than buying some in March and flipping it in April, I really am mad at myself because, it's a great product. In the end, Tesla's a great product. People love it. Not me, but you don't hear people complaining about their Teslas.
Well, we're forcing ourselves to go deep into that world this week, but this episode, I mean, guys, Jordan, Dave, I mean, we don't do this, Howard, and I'm so happy that our first kind of, we had Graham Stephan on the channel once, but other than that, we've never had a guest. This has been really cool. If you're watching today, let us know what you thought about us bringing someone else that we admire, that we respect into the dumb money world for a special episode like this, and if we should consider doing things like this more in the future. Howard, I was just going to say thank you. Dave, Jordan, I don't know if you have anything else left for Howard today, but it's about that time. I'm getting hungry.
Yeah, I see we want Howard back to life on the island.
I feel that I invited myself, so I appreciate you. I didn't.
Is Stoptoberfest ever going to happen again, or when's the next Stoptober?
I think there's enough good products that we can do an online version.
That'd be cool.
Where people can do. I think what you guys have, like I said, this self-directed, way to talk to friends. So I kind of didn't know your format enough. So I just kind of said, I love the show. Can I be on it? So I kind of invited myself on the show. So I apologize, but
well, this has been amazing.
We're glad to have you back. Anytime you're bored on a Monday or Thursday, just drop in. You now have our dial-in, so just pop in anytime.
And then we'll figure out a way to get this sitting on the top of the streams, like, when we want to go live and talk smart, long-term thinking to help. Because in the end, I think really just digging into ideas, beyond technicals and beyond just the basic fundamentals is how you make money. Talking to smart people that aren't all looking at the same data points is how you make money. Yeah. And I think that's why you guys are successful, right? Like it's, who would have thought that we'd still be locked up in our houses having to do this? It's kind of a tragedy, but it's also been, for my family, been a break. So I'm just part of the lucky crew.
Well, it's a change. It's a big change, and as we know, everything we talk about is with change comes opportunity. And Dumb Money, we're all about just identifying the change a tiny bit early and connecting that change to investable opportunities, whether in the public market or once we get spinning back up again with our primary Dumb Money channel, the private market and startups.
That's a great idea. What you guys are doing there is just encouraging people to take risk and bet on themselves and the joy of like helping somebody else do this. And we're seeing this with Black Lives Matter too. It's like, shame on us for like the only way to fix this through the private markets and to back Black founders and to hire, the math just makes sense. We're not doing the math right? We're like, the math shows that the success is out there. You just got to constantly apply pressure and back people. And so, the street level stuff that you guys do is actually great. The difference is the market's open, 5 days a week. There's so much to do in the markets as well. And then the two markets are so connected, right? Like
they are, whatever.
You're digging into the car industry, and you're going to have to learn about the private markets too.
I think whenever we're back out of our houses, I think we're going to probably continue to do the stock show because we enjoy it so much. And
I think you're on to something. I mean, I know it's a lot of work, but I'm happy to kind of dig in here and figure out some ways for you to do it. I think I've seen enough YouTube stock shows to realize they're just too technical, and I get them, they make sense, but to really help people make money in podcasts is lean back in the old way and really help your friends think through bad ideas and how to manage their gains and their losses. So I think you're on to something big. It's just a question of your time and, what's the best use of your time.
We got lots of time, Dave.
Right now, that's all we have.
Dave, do you tell everyone where they could see Dumb Money, and then have Howard also announce all the stuff that he has going on and what the URLs are for all of his too?
Well, I'm going to remind everyone to smash the like button and subscribe and turn on notifications and find our podcast on Spotify and Apple and all of them. Subscribe here, subscribe on my personal channel. Hey there, Dave here. And now, Howard, anything you want to plug?
I think the only thing I'll plug is, StockTwits is a fun place. You can follow me there. I answer questions. It's not so big that I can't get to everybody's question. I don't do the stuff on Twitter, but, I generally write every day on my blog, howardlindzon.com. You can sign up. It's a free daily email about the markets and my prostate.
That's true.
Private investing. It's true.
Very personal.
And my manscaping and everything that I do. And it's easy to find me. So howard@lindzon.com is my email as well. So
it's an email that I filter to the top of my inbox and make sure I read it every day.
All right. I appreciate it, guys.
Awesome. Thank you, Howard.
Thank you guys so much for watching. We will be back on Thursday with that show that Chris was talking about, all about the electrification, finding the next Tesla, and anything else you know. Oh, follow us all on Twitter. If you don't follow Howard on Twitter, you should. Howard Lindzon, @HowardLindzon on Twitter. @Chris Camillo, @Dave Hansen, @Jordan M. McLean. Jordan_McLean, right? Something like that. We're Dumb Money. We will see you on Thursday.